Hello, everybody. My name is Toño Flores. Um, just so you know, I am a real estate investor. I'm a full-time real estate investor here in Miami, Florida. And I got so many people that is getting into real estate investing, is learning about creative finance, but they say, "Hey, I'm getting these questions, I'm getting these objections, and I don't know what to say, either through sellers or through agents." So that's why I'm doing this video with you now. I'm gonna help you with one of the most common objections that we get when we talk either with sellers or with agents. And I have an amazing guest in here that is gonna help us with that, Dustin Geroski. So Dustin, thank you so much for being here. How you doing?
Yeah. Thanks for having me. I'm doing pretty well. Um, but yeah, I love uh, the subject matter we're talking about today because it is a unique niche. It's a lot of people don't fully understand, uh, but it's pretty legitimate and it's extremely useful when you know how to use it right.
Yeah, yeah. So yeah, I mean, if you can tell us a little bit of how you got into real estate investing, what are you working on right now? Like, what was the thing that made you say, okay, you know what, I'm getting into real estate investing? Tell us a little
Yeah,
bit more of your background.
yeah. So in short, my bachelor's degree I received on Oahu in Hawaii. uh, BYU Hawaii. I went for the supply chain management, also project management, and then my wife and I met out there. We came out here to Florida for grad school, so I went to grad school in Fort Lauderdale, NSU, and it was there I received a finance MBA. So the more I kept learning about the different subsections of finance, because that's such a broad word, um, I became really intrigued by real estate because of how many different people I had been meeting that were just abnormally successful. Um, and the common denominator was real estate. And so once I just started asking more and more questions with those people, it snowballed into becoming an investor myself. And then eventually the license, um, just for more credibility for when I invest with the bigger players. Um, they they have a little more trust in me, and so yeah, that's the short version. My main business partner, he's the one that really brought me into real estate about a year ago. But we had some mutual friends, and he was just casually talking about how he was going to go climb Mount Everest next month, and I was just like, "What?" And so just started asking questions and learned he had a pretty large portfolio. Um, and then yeah, we just became friends and actually started doing business together.
Hmm.
And so, yeah, here we are.
That's so cool, man. Now you also told me you did recently a subject tour, right?
Yeah. So I first learned about Subject 2
Yeah.
in this December. Um, and then the more I started learning about it, I went and asked title companies, lawyers, and I found out it was legitimate.
Mhm.
And so what I realized is it's a unique type of transaction, and so therefore your regular retail professionals just aren't familiar with it. So regular title company or regular agents and brokers, just because they don't understand it, I realized didn't mean it wasn't legit. And so once I realized that, I was like, wow, this is awesome. Um, so the way that deal happened was my business partner and I were actively hunting to buy property in Orlando. And so as I just kept networking and finding different deals,
Hmm.
I found a property pretty close to Disney where the gentleman, we actually had a mutual friend. Um, his property was similar to what we were looking for, but not didn't quite meet our buy box. But I was like, hey, if you're willing to sell this on certain terms, I could totally help you find a buyer. And
Mm-hmm.
so once, because we had some decent rapport, he was willing to hear hear me out, let me explain the terms, and then he did his own homework, realized everything I was saying was true, and so yeah, he was able to sell his home, um, where he probably wouldn't have been able to. He'd probably still have it today,
Mm-hmm.
and he had a lot of life changes, and he lived all the way on the West Coast, so he wasn't interested in keeping that Florida property anymore.
Mm-hmm.
And so it looked like there's no way he'd be able to sell it, especially on the MLS,
Mm-hmm.
by the time you pay all the closing costs and commissions. But with the Subject 2, he was able to not pay commissions. He didn't have to pay closing costs.
Mm-hmm.
And because of that, the investor was able to cash flow it. He was also able to get the purchase price he wanted. So everyone in the situation was able to walk away happy. It was pretty cool.
That's so interesting, Dustin, because we get a lot like and of people asking, "Hey, why would someone sell their house on Subject 2?" So I don't
Yeah.
know if you can tell us a little bit about like how much would the seller have got in their pocket if they have sold that property traditionally versus selling it on Subject 2? Like what was the difference there?
Yeah. So there's a lot of differences, honestly. Like from an opportunity cost perspective, scenario A, he sold it regular on the MLS. Scenario B, we have Subject 2. Well, scenario A, typically he's going to get lowballed, especially in the current market. He's going to have to pay closing costs. He's going to have to pay just all the title stuff, all the commissions. And so that would have cost him about 10%. Instead of paying 10% by
Mm-hmm.
the traditional model, he got cash in his pocket. He got the purchase price he wanted, and the buyer paid closing costs.
Mm-hmm.
So the delta of that is at least 10% difference
Mm-hmm.
in the outcome, the total money that he's getting.
When you say 10%, you mean like it's the listing agent commission is 3%, then
Mhm.
the buyer's agent commission another 3%, and then another 3% of closing costs and all of that
Yeah,
is
just
is
like
like
title search, yeah, like all the miscellaneous stuff that you have to do that just starts really adding up.
I see. I it totally makes sense. The other thing that we get a lot is people confuse the word equity,
Yeah,
right? So people, for example, say my equity is 400. I'm sorry, the value of the house is 400,000, but I have a mortgage in there for 380,000. So my equity is 20,000. That's not
yeah,
true, right?
not with closing costs. No.
Equity is what you get in your pocket after you
Yeah,
have paid everyone and you close on the deal, right?
yeah, yeah, definitely.
Yeah, yeah. No, really cool, Dustin. So, what was you were able to help this seller, and what was the exit strategy on this one? What did you do with this deal?
Yeah, so it was a turnkey Airbnb near Disney, and so I mean, essentially, I just wholesaled it, but the end buyer is already furnished, and so he customized it a little bit the way he wanted it, and he's just running it as an Airbnb.
Nice, cool. Well, how much was your assignment? That's really cool.
Yeah, so I this one I didn't try to take a big bite. This is about 6K. Honestly, it could have been closer to 15, 20.
Okay.
But I knew the seller individually, and I wanted to make sure that the deal happened for him.
Yeah.
Um, but yeah, I mean, it definitely could have been more. Um, but our mutual friend, I had known her for like almost 10 years now.
Yeah.
So it was a cool situation. So it was
Oh,
the
fantastic.
first. was the first wholesale SubTo deal I had done. So it's cool to see it up close, all the details, and then see how everyone was able to benefit at the same time.
That's so cool, Dustin. Like, I want to now like talk about like when you were having this conversation with your seller, like what were the questions that he was asking you about subject to? Like, did you get any objections or questions or concerns about it?
Yeah. So the big ones, the
Mm-hmm.
most common right off the bat are, well, why would I let someone use my mortgage?
Mm-hmm.
And the big reason is, especially in this interest rate environment where they're rising. If your mortgage though is 3% versus 7% if an investor acquired it now with a new like a DSCR or something, it makes a huge difference on that investor's cash flow.
Mm-hmm.
But the seller, they're like, well, what happens if they trash the home? Well, I mean, the investor, when he's acquiring it from the seller, typically he's putting money in the seller's pocket, some sort of down payment, maybe 5 to 9%. The investor's paying closing costs. The investor's taking time. So it's like if the investor lets someone trash it or just got sloppy with it, he's going to lose a lot of money.
Mm-hmm.
And it's just, it doesn't, when you look at it from a purely business perspective, it's like, okay, why would an investor give you all this money and then just let this go to waste? The other thing I hear common is, well, what happens if the investor, the buyer, misses the mortgage payment? Um,
What
which
they are
is,
really asking is, I'm sorry, but I just want to add something in there. What they are really asking when, hey, what happens if you miss on the payments is like, how am I protected, right?
yeah.
Yeah. So what was
So
you want?
so when these deals are done, they're typically the transaction coordinator, which is a third party that specializes in these subject to deals. Those are pretty much always used, and they know how to structure it in a sense that it's protecting. Honestly, it's protecting the seller significantly. And so it depends on the state, but I know in Florida we call it a deed in lieu of foreclosure.
Mm-hmm.
This is a pre-signed document. So let's say a mortgage payment's missed, and this is written up all through title, but it says if it is missed, there's this signed document saying from the buyer that they're going to get the keys over. And so like it's all recorded through the county.
Mm-hmm.
Um, the deed in lieu is typically held, but it is already signed, and so it's pretty favorable, honestly, if
Mm-hmm.
they'd miss a payment because the seller they get the house back, but they also get to keep any money that they collected,
Mm-hmm.
any improvements that were done, they get that benefit of. And the way I've seen it and heard it described from other investors as well is when they have all this written up,
Mm-hmm.
it's so favorable that they actually have to have the seller sign a statement saying they won't provoke anything to cause the buyer to have to give it back. That's how favorable it is for the
It's so
seller.
funny because when they ask, hey, what happens if you miss on the payments? Like,
Yeah,
it's like, I mean, it would be the best thing that can happen to you, right?
yeah,
So,
yeah. From a like risk reward ratio, like when the seller typically first hears this, they think, "Oh my gosh, I have all this risk," and then just a little bit of reward. So they think it's skewed not in their favor.
mm-hmm.
But in reality, it's if something does go bad, it's actually more beneficial than if it didn't. Like it's there's so much collateral involved, and it's designed to make it
Mm-hmm.
attractive to the seller. And then the reason it's like that too, it's because typically the only people doing this transaction are investors, so they're confident in what they're doing.
Of course, I would like to add something in there. When I think that when it comes to subject to, what we are buying is debt. We are actually not buying properties. We are actually buying debt.
Yeah.
So, for example, what do I mean with buying debt? Since we are taking over the payments on that mortgage, all we have to know is how much we can get in rent, depending on how much we can get in rent after um, how much we can get in rent, and then what's my monthly payment, what's the PITI, right? What's the purchase, the principal, the interest, and then what are my taxes every month, and what is my insurance every month, and then also the HOA. There is the HOA. Sometimes properties have HOA in those areas, so we are also taking over those payments.
Yeah.
So just by having some gap in there with the rent that we get and the monthly payments, like that's the cash flow, right? So as long as we have cash flow, we are like we lower that risk, right? What
Yeah.
would you say to that?
Yeah, definitely. Because I mean, the ultimate wealth is this approach. It's the buy and hold. Most people are familiar with the game Monopoly, and so these type of investors, uh, like us, I mean, essentially, we're building equity. We're not trying to make short term profits like flips and stuff necessarily. It's because when you look at all this from a tax perspective as well, um, there are major incentives to holding properties given by the IRS. So you have most people know about regular depreciation,
Mhm.
which is about 3.6% per year. But then you can write off mortgage interest, and then there's cost segregation. So yeah, I mean, typically this property or just one property example, it's you're going to have the spread, the revenue, and then you have some distance between your expenses.
Mhm.
So maybe you cash flow $500, but by the time you write off all the things that the IRS allows you to, it's actually going to show a loss. So
Mhm.
yeah, it's definitely favorable for the investor to make this work to the best of their ability.
Yeah, absolutely. And I mean, everybody wins because you are getting a mortgage that we won't find like in I don't know how long. Like right now, we can get only mortgages at 7%, 8%.
Yeah,
So the investor wins, the seller wins because they are protected, and also there are cases where a lot of cases there is an agent involved, so an agent gets paid as well. So it's a win-win-win. Now
yeah,
there is another question. Maybe the seller is not that worried about the investor making the payments, but we get a lot like, okay, I don't have a problem with this being in my name, but I have to buy another house. I
yeah.
cannot get approved to buy another house because this is gonna be in my debt to income ratio. It's gonna be on my credit.
No,
What's the solution to that?
yeah. So it's definitely one of the top five questions that pop up, and there's definitely answers to it. But when it's done right, when it's done, you're using a transaction coordinator. They're going to set this up with a servicing company, and so
What is a servicing company?
yeah, so it's a third party company where when the let's say there's a tenant in this new property, when they pay their rent, it's going to the servicing company, and then the servicing company is going to make the mortgage payment and then also give the investor any leftover essentially. And since it's all done professionally with the servicing company and it's documented, and it's filed appropriately, the bank or lenders, especially investor friendly lenders, they see this and say, okay, like this is business to business. And so then, depending on the lender, but
Hmm.
essentially this property can fall off the DTI,
Hmm.
and it's just another reason that why you want to use the appropriate, like an investor friendly title company who specializes in this, and then a transaction coordinator who also specializes in this. Because these are, especially this question, it's super common, and there's a whole list of answers. And those professionals know exactly what to do. But yeah, in short, when it's done right, it falls off the DTI.
Got it.
And some lenders, it's incrementally, different time milestones. But yeah, there's definitely answers for that.
I would. That's really good. Thank you so much. I would like to add something in there. Also, it depends of how fast the seller is looking to buy the next house, right? Because
Yeah,
you will get sellers that say, "Oh, I already have another house that I can that I can move into," or "No, I have to sell this house for me to be able to buy my next house," right? So you get the short term, and then you get the long term. Now, when it comes to DTI, let me know if you can add something in there. If you got a seller that already has a house, but maybe after a year they want to buy another house, all we gotta show the lender through the servicing company is that we are making the payments and not them, and that's
yeah,
how they wipe out 75 percent of the
yeah,
debt to income ratio. So that's how they get approved to get a new loan on the new house. But if they need to buy a house, let's say in less than 2 months, there is another thing that we can do, that you can do a lease purchase.
mhm,
You can show two payments that are being made on the on to the renter, to I'm sorry, to the seller, to the lender, and that's
yeah.
how they get to wipe out most of the debt to equal ratio. So you get those two options.
Yeah, the other cool strategy and approach I've heard and
Hmm.
seen people use is they just learned about this new transaction, right? Subject to. Um, Now they understand how it works. They can buy like that as well. So then they're not restricted by the DTI, or even the other choice is maybe they buy through seller finance.
Hmm.
And so now they, by letting someone purchase their home, they learn a very cool strategy that puts more money in their pocket, but now they learn how they can buy properties. And so before, their belief system thought they could only buy their next property in this tiny little box of, oh no, my DTI, I can't get anything. Where they can buy so many other ways now that they've gone through this.
That's so cool. It's like, why aren't you buying houses subject to? Like, why get a loan at 7%, 8% when you can buy a house taking just over the payments at 3 or 4% interest rate? So
Yeah.
it's really cool.
Yeah, because by being open minded and learning how to sell the property in a different way, they're going to learn a really cool skill set, that's going to save them a lot of money if they use it over the next few decades, whether it's buying their own properties or buying investment properties. Because when they sold their property, they got to see all the details and they get to learn it how it works.
Hmm. I wanted to add something in there, because you said for this type of transactions, we gotta find a title company and a lender that knows how to do this type of transactions. Because what happens a lot is that we get, for example, agents or sellers that say, "Hey, I already talked with my lender," or they say that this is not possible, that they cannot offset my debt to income ratio. So it happens a lot. The thing is that real estate is very broad. So um, there are title companies that only work with homeowners, and there are title companies that work with investors. The same with lenders, right? So we gotta make sure that we work with a title company and that a lender that has done this type of transactions, that has done subject to transactions and creative transactions.
Yeah, yeah, definitely. And
Yeah.
they're out there. Just takes
Mhm.
some networking.
Of course, just ask someone that has done it, and they can help you with a lender and the title company.
Yeah,
Yeah.
yeah, definitely.
What's another question that you get? Another common question.
Yeah. Um, the big one I've heard, and so when I was shopping around for brokers,
Hmm.
um, I wanted to find one that would let me do what I wanted to do and not be highly restricted just because they didn't understand things. And so I actually put a broker and an investor-friendly title company on a group call together. And so the question though the broker had was like, well, how does the insurance work? What's going on? Like and so I won't dive into all the details. That is a big question, but when it's done right, the title company, the investor-friendly title company, they know exactly how to transfer insurance, how to put the names on it, what the timeline of how they're handled. And so that was one of the more recent questions that I was able to hear the title companies give very good explanations and details on to the broker. And so that is a common one, but without diving too hard into the savvy title companies, they know exactly how to handle it.
And also, you mentioned the transaction coordinator, right? Also, you can get a creative transaction coordinator, and they can help you with the paperwork, with communicating with the title company. So you actually don't have to know it all. You can have or the title company or a transaction coordinator to help you with everything, right?
Yeah, definitely. Because as long as I think it's actually better to have the transaction coordinator, because that way you could focus on your craft and you could focus on acquisition and finding your next deal. Once you have one under contract, you could focus on what you're really good at, and then the transaction coordinator, they could focus on just making sure it gets through and all the tedious little details. But that's their specialty, so they know exactly the tiniest little details that have to happen, when, how, why, and so it makes it a lot easier, and it helps you keep the momentum when you use the transaction coordinator.
That's so good. Now, the one that we are missing, what do you say, like the boogeyman, the do on sell clause? Like we get a lot. Oh no, I can do this because of the do on sell clause. This is not possible. The bank is gonna call the loan due. So what do you say when an agent or seller tells you about the do on sell clause?
Yeah, so that's definitely the most common rebuttal, at least from agents and brokers. And that's where the transaction coordinator comes in. That's probably the most value they bring. It's because the documents in the transfer of deed title, it needs to be done in a very specific way. Otherwise, that is what will trigger the due on sale. But also, it's important to, I think, emphasize that the banks have the choice. It's not they have to do something. And so
they have
at
the
least
right, not the obligation, right, to call.
Yeah,
Sell clause.
because if it's a good performing note, that doesn't mean depending on their balance sheet and stuff, they'd be like, okay, as long as this performs, that's what we're trying to do. But yeah, I mean, the reality is, all the data I've heard from investors and my own experiences, it's less than 1% of the time the due on sale is triggered.
I was about to say, yeah. Like, what's the probability of getting the do on sell clause? Like, we know, for example, in the SubTo community, we know investors that have done thousands of these transactions, and they have got the do on sell clause called on them 2 or 3 times, right? So it's really, really low.
Yeah, and by using the transaction coordinator, it lets you be in that really low percentile of probability. But even if it does happen, you have time, and there are steps that other investors have already outlined for that situation, like such as land trusts. Like there's a handful of things that can be done to figure out what you need to do.
Yeah, like you're saying, like, even though it happens, let's say that the do on sell clause happens, there are ways to avoid that, or like to solve that that problem. One of the things that you can do is just by calling the bank and saying, hey, you know what, I am an investor. I took over those payments, but I'm making those payments. Are you okay with that? And most of the times they are going to be okay with that. But let's say that they are not okay with that. What you can do is go back to your seller and tell them about the situation. And what you can do is an executory contract. An executory contract is the same to depending on your state, is a land contract, an agreement for sale, bond for deed. So you get the deed back. You get to get the deed back to the seller, and now you are making the payments. But now the deed is on the seller's name.
Yeah.
So you have control on the property. That's an executory contract.
So it's like, yeah, I mean, it's a less than 1% chance of happening, especially when you use the TC. And then if it does happen, it's like, so what? You have a whole menu of things that you can do to resolve the problem. So if it definitely shouldn't be something that is that scares anyone from doing a subject to transaction.
Wow. Yeah. I want to add one last thing, and this is for everybody. Like, for if you are an agent hearing about this right now, a realtor, like subject to seller finance and these other creative strategies, those are just like a tool that you can have in there. Like, it is absolutely way better to sell the house with cash. Absolutely way better. But if you cannot get someone um, to get close to the asking price or whatever, this is another tool that you can have, right? And then I would say that once you learn these strategies, you feel that you can help anybody, like people from not only in nice situations, like you can help people from going through foreclosure, and they don't have equity, so you can help a lot of people knowing these creative strategies, right?
Yeah. Or even retirees, maybe they want to sell off, but if they sold everything, they'd have huge capital gains. So there's a lot of different scenarios where people can be helped with the more creative side.
Absolutely. So this is just a tool that you can have in there. And yeah, I mean, that would be it. I think that we gone through the most common objections. Let me know if you have down below, if you have more questions about this, if you want to go through these questions. I'm gonna leave Dustin's information down below, so make sure to connect with him on Instagram, on Facebook. So I'm gonna put his information in there. So before we go, Dustin, like, just wanted to ask you one more thing. Like, if you are not doing real estate investing, what do you do on your free time? What are your hobbies?
Yeah, so the big two, I run. I'm doing a marathon in December, and then I like to read. I like to read a lot of different. Right now, it's business books. So between those two, those are our main hobbies.
Is it gonna be your first marathon?
I've done one before, so this will be my second, and I'm just trying to beat that time.
That's amazing. Maybe after that, an Ironman.
Maybe, I don't know. I don't really know.
No, that's amazing, man. And like, what books do you recommend to people to read, for people to read?
Yeah, I have a couple here, but I really like. It's called Psycho-Cybernetics.
Wow.
It's a psychology book. Think and Grow Rich. And then I like Pace's book a lot.
Pace's book,
his recent one. So
Well Without Cash, that's a good one.
Yeah.
If you want to start learning about these creative strategies, that's a good one, absolutely. And like, where can people find you, like on social media? How can they connect with you?
Yeah. So we'll attach my link tree to this. But Facebook and then Instagram are my main, probably the easiest ways to contact me.
Perfect. Yeah, like, make sure to connect with him. I'm gonna put all the information down below, and please make sure to take notes. You can go back again and make sure to take notes, because this will help you a lot. You will feel way more comfortable having these conversations with agents and having these conversations with sellers, and you are gonna build way more credibility. Like, if you know how to answer these questions, these objections, you will have a higher chance on getting the deal done, right? So yeah, that would be it. Please let me know your takeaways as well, what you learned, and if you want to add anything in there, please let me know. And please connect to Dustin; he's a beast. And yeah, that's all. Thank you so much, Dustin.
Awesome. Thanks, man.
All
Talk
right,
to you soon.
see you, man.